Welcome back to Gold Seek TV. I'm here at the VRIC conference in Vancouver with Ronnie Stoeferle. Ronnie, thanks for coming back on to Gold Seek TV after only 2-3 months from we spoke in Zurich. Boy, silver has more than doubled since then. Gold has taken off by another $1,000 an ounce. Are we getting too far ahead of ourselves here in the metal prices? How do you see it?
I mean, it's definitely a parabolic move. Yeah. What makes me a little bit concerned is obviously that the sentiment is extremely positive. Everybody is excited, and we're seeing on a daily basis, all the big banks are raising their price forecasts and stuff like that. But then on the other hand, from my point of view, the commitment of traders report still looks like as if there's some room to go. So I don't see any extreme positioning yet. It makes me pretty confident. But the market is not a one-way street. There's gonna be a correction, a nasty correction. And I mean, I think that's what I said at the panel before. We're in a bull market. We're not in a bubble yet. But obviously, the price the price development over the last couple of days was just crazy. And to be honest, nobody really knows what's behind that move.
It seems like there's a convergence of factors, demand factors, especially with silver coming to play. It is issued as classified as a critical metal in the United States. It's been almost been weaponized between the superpowers. It's essential, critical, strategic metal. But at the same time, you've had the Western investors finally take notice of the silver prices. It just seems a lot of things are happening at once, and you have supply issues in certain markets of the world, but not really in the West. There seems to be still enough silver stockpiles. Are we going to have is silver becoming part of a conflict as well? Is it becoming a metal of kind of a resource war?
Perhaps. I mean, I think in general, if we take a step back, I think one of the major developments over the last couple of months was that actually governments, and especially the US government, realized, well, actually, we need secure access to resources. So that was like one of the main takeaways that I had from the Beaver Creek conference, where all the companies that are based in the US or companies that are based in Latin America and producing or searching for strategic metals, they all said, well, actually, US government agencies contacted them, with offtake agreements, offers, financing offers, and so on. So I think the Americans now really get, okay, we have to make sure that we'll get all the resources that we need for our, manufacturing renaissance. Europe, not so much. I think Mrs. von der Leyen put out some paper that by 2030 they want to have like 70% of the supply of critical metals sourced within the European Union. I just don't see it. Yeah.
Yeah.
But I think that's really the major change. And of course, silver is a part of that story. But I think it's not really the decisive driver. I think silver. We always said that gold goes first, and then at some point, like in cycling, that was the thesis of our In Gold We Trust report last year. Like in cycling, out of this draft, there's silver and commodities following up with huge momentum. And there was a point when people said, well, gold is already too expensive for me. Gold-silver ratio is above 100. Well, actually, not only on an absolute basis, but especially on a relative basis, silver is dirt cheap. And now, investors' demand was kicking in. Now you really have the momentum. And I think that people underestimate, once the momentum is really kicking in, how far it can actually make the price of silver rise.
It's in a blink of an eye, you can have a revaluation in the sector. The silver price has doubled in the last few months, more than doubled. Like you said, there's a potential for, at some level here, a pretty significant pullback. Will that be a buying opportunity at that point, or will that signal kind of we hit some sort of peak for a while? Or do you think this is a bull market that develops over many years still in the silver side?
Well, historically, we've seen at major gold peaks, the gold-silver ratio trading between 10 to 15. Now, our thesis has been, and we published that in the In Gold We Trust report 2020, we said $4,800 is our base case scenario by the end of this golden decade, 2030. But there's also an alternative scenario, which is the inflationary scenario, which is 8,900 by the end of this decade. Now, actually, we are right on track. Actually, we have exceeded that interim target already a little bit, but I still think that 8,900 is pretty much realistic. And then obviously silver would have way to go. Now, 8,900 sounds still pretty bullish. But from now until 2030, that's a CAGR of 12.3%. So I think that's pretty realistic, especially with gold performance last year. And I think that, the big question, Peter, for us should be, is this like a normal gold cycle, or is it a revaluation cycle? Are we really going back to some sort of a monetary anchor in gold? So, and it seems that we're really, this is really happening. Yeah.
Well, you see that with central banks. I mean, they've overtaken the treasuries as their number one asset. So from the central bank perspective, they're running into gold for safety and for stability,
Absolutely.
for
And I mean,
whatever reason.
you probably feel the same. There's like things happening where I said, okay, well, we talked about those things. We wrote about those things ages ago.
Yeah.
And now it's really happening. Yeah.
Yeah.
Am I still dreaming?
Yeah,
Yeah. Wake me up.
quite unbelievable. Yeah.
So it's the whole de-dollarization story. It's the whole, um, diversifying out of bonds. I've got this posted on my screen in my office, which says "Scare your investors out of bonds." That was an advice by an early mentor of mine, and I think that's really the future demand for gold, for silver, for hard assets from this huge fixed income market, which is 170 trillion US dollars. If there's some capital moving into hard assets, that's lots of future demand. Yeah.
And you did post something about this recently. In the West, allocation to gold is very low. It's almost closer to 0% than it is to 1%. So is this the phase two where it's just not the central banks buying the fixed income, it's the wealthy individuals, retail, and so on. They finally, I think now they're starting to get that there's a bull market in gold.
Yeah.
It's been like a stealth bull market move for the last few years.
Well, that's something that we're working on, really reliable data, how much gold is being owned by institutional investors. Goldman came out with a study where they said it's 0.17, so 17 basis points of their large clients' allocation is in gold, which is nothing, which is 5 basis points below the highs in 2012. Then there was, I think, JP Morgan coming out with another study that was, I think, 2.8%. So pretty different, but that was on a global basis. But the majority of that rise in that allocation, up to 2.8%, was due to the gold price development, not because of inflows.
Fine. Okay.
Now, last year we've seen some inflows into the gold ETFs. We've seen outflows for GDX and GDXJ, which is really interesting. So again, I think if our thesis is correct, and that's really, I think that's important to emphasize. I think the foundation of this secular bull market is coming from emerging market demand. That's more than 2/3 of the annual gold demand now. China, India, Arabic world, Turkey, and so on. Then we had central bank demand kicking in 2022, and now, very late in the game, Western financial investors are joining the party.
Is this the year where gold and silver stocks catch up to the metal prices? Is that where the opportunity is at the moment?
Yeah, we're already seeing that the mining stocks actually only last year started to outperform gold. 2024, they underperformed the price of gold. So now I think it's happening, and the next stage would obviously be that there's more capital flowing into the junior space. So we haven't really seen a major outperformance by GDXJ versus GDX. And usually over the course of a bull market, in the later parts of the bull market, there's enormous amount of capital flowing into the juniors. There's much more M&A. M&A is picking up. Just this morning, I saw a couple of news. I think Allied is being taken over by Zijin, for example. And I think there's going to be much more deals. But primarily, I think in the junior mining space, this is where the music will really be.
The big upside potential still remains. Well, that's interesting. So the signs of us entering into the bubble phase, maybe it really hasn't really. We don't see the signs yet of the final phase yet of this bull market happening, but maybe we're starting to enter into it.
I mean, I don't want to be I don't want to spoil the party. But there's gonna be a drawdown, yeah.
Yeah.
And it's gonna be a big drawdown. Can silver go down now $20-$30? I mean, that's that used to be the total price, yeah, and now it would be like a normal correction, yeah.
Yeah,
And also in absolute terms, yeah. I mean, if gold corrects now 15-20%, that's like $1,000, yeah.
That's incredible.
And everybody would write about the big gold crash, yeah.
So would that be your next buy signal? Would you look at that?
Probably, yeah. So we're, in our funds, we've become a little bit more cautious. We didn't hit the brakes, yeah. We took the foot off the gas pedal a little bit, yeah. We still have some call options out that made really, lots of a contribution, especially for in the silver side. But I think it's also, as great as the upside is, as an asset manager, we have to be very cautious of the downside as well.
Manage the risk. Well,
Yes.
that's the great insights, Ronnie. We appreciate it.
Thanks, Peter.
You help to manage investments. You write the Incrementum, the yearly report on the gold and silver markets. We'll share some links about that, and always sharing all your wonderful insights to all of us. So we appreciate,
Thanks, Peter.
You are so involved in this sector, and it's really great to be able to help guide us through these very exciting and volatile times. So, Ronnie,
Thanks, Peter. Appreciate it. Thanks.
Thank you.